Welcome to the Federal Retirement Podcast. My name is David Rates from Benchmark Financial Group, and every month we discuss important topics regarding the retirement planning process for federal employees. This Lunch and Learn series is an interactive discussion where individuals can ask questions. To join these discussions live, you can register by joining our email list at bfgkc.com. Additionally, if you're looking for assistance to get your retirement on the right track, set up an appointment with us today. You can schedule an appointment online by visiting our website, bfgkc.com, or email me directly at david.rates@bfgkc.com. The contact information is also listed in the description. By setting up a complimentary consultation, we can review your financial situation and develop a plan to meet your financial goals. We hope you enjoy this topic and hope to connect with you soon. Thanks everyone for tuning into this month's call, where we decided to touch on the benefits of working with Benchmark Financial Group, or I guess in a nutshell, the benefits of working with an advisor that operates like in our business as opposed to doing it yourself. So we're just going to touch on some important things to take into consideration if you're weighing the pros and cons of what to do going into the retirement planning process. All righty, so we always have this slide in the deck because we're securities licensed, but it takes on an additional level of importance for this specific call. In our world, you have to have certain licenses in order to be able to technically give investment advice to people. So that's an important thing to take into consideration. And we always put this disclaimer on any piece of marketing material that we put out to the public. But like I said, it's an important piece of the pie if you're weighing, what to do. Do I want to do it myself or do I hire an advisor? In our world, there are folks that operate in our business that might not necessarily have a securities license, but having a securities license or being licensed to give advice on investment vehicles that are tied to the stock market is a very important piece of the pie. So we'll elaborate on that here in a second. But all righty, so Benchmark Financial Group, our advisors are technically defined as investment advisor representatives. So like I said a second ago, in a nutshell, that's just industry jargon for we're licensed to give investment advice to the folks that we're working with in the planning process. So important thing to take into consideration, like we were talking about. Okay, so the value of working with an investment advisor. Some of the key bullet points here to take into consideration is the first one is really important. Oftentimes, one of the most important things that we do is we're a resource of information for our clients. So not only are we a resource of information when it comes to the planning process of, how do I piece all these puzzle pieces together in terms of the benefits that I have into a plan that makes coordinated sense, but going forward in life after retirement, oftentimes things crop up and people have just questions that they want to bounce off of us and weigh the pros and cons of getting a second opinion on something they're thinking about and helping them make an informed decision on the best way to tackle XYZ issue that they're trying to get sorted out. So like I said, being a resource of information to our clients is a very important piece of the pie. Bullet number 2 is also extremely important: comprehensive planning. So we've always emphasized that in order to do planning or retirement planning the right way, you've got to take into consideration all the pieces of the pie. If you're looking at hiring an advisor, a lot of them oftentimes will be more than happy to talk to you about what to do with TSP, or if you want to drop a portion of your federal employee group life insurance and replace that with outside insurance. There are a lot of folks that are more than happy to give you ideas on what to do with that, but you can't just look at it piecemeal. You've got to take into consideration all the pieces of the pie. So when you're putting together a plan for somebody, you've got to coordinate TSP, FEGLI, FERS pension, the first supplement, Social Security, the timing of when benefits kick in. what it looks like in terms of what they're making for net monthly income, whether while they're actively employed relative to, what's your net going to be looking like as a retiree. So like I said, the most important variable for comprehensive planning is taking into consideration all of the variables, not just, one or two, what we call low hanging fruits. So, and then investment management is also an important variable too. So oftentimes folks are looking for assistance in terms of figuring out, which funds do I need to be invested in, or sometimes they'll just rely on us to take care of it for them, which there's nothing wrong with that. But oftentimes the people want to have a little bit of involvement in what's going on, but you also have to have the time to devote towards figuring out what sectors to be invested in, when to reallocate. And I always say about TSP, all the funds are fantastic funds. It's just the market's a fluid thing. So sometimes it's more advantageous to be invested in certain funds and less advantageous to be invested in other funds. So investment management and investment advice in terms of the timing of what's going on in the marketplace is a big variable too. And we kind of touched on this a second ago, but incorporating your federal benefits into a comprehensive financial plan is a very important piece of the pie for federal employees. So you can't, like I said, you can't just look at what should I do with TSP or what should I do with FEGLI. You gotta incorporate it all into an overall plan to make an informed decision that's the best for you. That's the most effective way to do it in terms of the planning process. Alrighty, so the value of working with an investment advisor. This is an important slide, an important thing to marinate on and take into consideration. Should I be a do-it-yourselfer or should I hire an advisor? So some questions that you need to ask yourself or you need to marinate on. Do you have enough time to devote towards managing your retirement assets on your own? Now, given everybody has families, lives, jobs, oftentimes you could argue that there's nothing wrong with set and forget it, but at the same time, could you be doing better if you had somebody that you were working with in conjunction with what your thoughts were that has a little bit more time to devote towards those things? And bullet point number B is, do you have enough time to stay up to date on the research, the variability of what's going on in the marketplace, investment options, investment opportunities, changes in tax laws? So that's always a fluid thing, just like market variability. So oftentimes that's one of the more important variables of why people seek out people or clients of ours seek out our assistance in putting together an overall financial plan. And bullet point number C is an important one to think about too. I mean, if you retire in your 50s or your 60s, sometimes there's nothing wrong with being a do-it-yourselfer, but do you want to be a do-it-yourselfer over the long haul of a retirement? So do you want to be managing the stuff on your own when you're 70, 80, potentially 90 years old? So also, that's an important variable to take into consideration when you're deciding what to do in terms of a retirement planning process. So, alrighty, benchmark financial advisors are fiduciaries. And this is an important variable too. So in our business, it seems like they've been trying to redefine the definition of fiduciary a number of times over the years. But in a nutshell, the most important thing to ask yourself in my world is, I always look at it from the standpoint of, is this what I would do if I was in this person's shoes? And in our world, you have to have a moral compass, okay? And our clients put a lot of trust in us, and we take that very seriously. So it's important to understand the value of a fiduciary, but technically, by definition, it's an individual who is ethically bound to act in another person's best interest. They must prioritize the needs of their clients above their own needs, and they must avoid conflicts of interest and disclose any potential conflicts of interest. Sometimes in our business, folks tend to look at the planning process in terms of what's going to pay me the most amount of money in terms of recommending investment products or investment vehicles to XYZ person. And that's definitely not the way that, that you want to look at it. You want to look at it from the angle of, is this what I would do if I were in this person's shoes? And is this the right thing for their specific situation? So again, it's an important thing to take into consideration, and it's also important to think about the fact that, like I said a second ago, our clients place a lot of trust in us, and we take that very seriously. So we always try our best to think in terms of what's in the planning process, what's in the best interest of our clients, not necessarily what's going to generate the most revenue for our business. So, all righty. So how do you know if an advisor is a fiduciary? There's a nifty little tool. There's an entity in addition to the Securities and Exchange Commission called FINRA, Financial Industry Regulatory Authority, and they make sure that broker dealers operate fair and honestly. They work under the supervision of the SEC, and to conduct at the end of the day, their goal is to conduct securities transactions in businesses and individual firms that are registered with FINRA. So you have to go through certain vetting processes in order to get licensed to do certain things. So they're the organization that administers and monitors the exams that you need to take in order to get to a point where you can be licensed to give investment advice to people. So those tend to be a lot of times folks hear about the Series 7 exam, but there are a number of series exams out there, like Series 6, Series 63, Series 65. That would be the test that you would need to take to become an investment advisor representative, or someone that has the ability to give investment advice to somebody that you're working with in the planning process. So FINRA has a nifty little tool too called brokerage. So you just go to Google search bar and type in FINRA brokerage, and you can pull up a laundry list of information on pretty much everybody that's licensed to transact business in the securities world. So it's public access to information about brokerage firms and investment professionals. It tells you if a person or firm is registered as required by law to give advice in offer securities, offer investment advice, or both. So those two are, again, important variables to take into consideration. If you're talking to somebody about a potential investment vehicle and they don't have a securities license, well, technically they're not licensed to give you advice on what to do with TSP, because technically TSP is invested in mutual funds. So if they don't have the right credentials, it's confusing for somebody that isn't in our world. But if that person doesn't have the right credentials, well, technically they're not licensed to give you advice on what to do with TSP, which is invested in mutual funds, which are tied to the stock market at the end of the day. So, and then basic information from the SEC on investment advisor public disclosure database. So, like, in a nutshell, it's just a resource of information where you can go get a dossier of info about anybody that's licensed to transact business. So this is a little snapshot of Benchmark Financial's page from finrabrokercheck.org. But we thought it'd be useful to throw in our specific pages here too. So if you want to run a broker check on me, you just go to brokercheck.finra.org, type in David Rates, and you can pull up a laundry list of information about the exams that I've taken, the states that I'm licensed to do business in, and how my ability to operate in the investment world. So This is a snapshot of Dad's page from FINRA Broker Check. So um, he's got a few more years of experience under his belt, but I'm nearing 15 myself, 13 years and 2 months. So all righty. Benchmark financial group advisors have a special knowledge of federal benefits too. So going back to that idea of a lot of times when you're talking to folks, they're more than eager to talk to you about the low-hanging fruit, which would be usually tend to gravitate. The low-hanging fruit would be defined as you can find a number of people that'll give you ideas on what to do with TSP money. Oftentimes you can find a number of people that'll give you ideas on what to do if it makes sense to replace a piece of your federal employee group life insurance. But you got to ask yourself, do those folks have an ability to coordinate all the other Fed benefits that I have into a comprehensive plan that makes sense? Because there's the federal benefits oftentimes get overlooked, but they're a very important piece of the pie when you're a federal employee, and there's decisions that need to be made on each piece. So a lot of times people, we spend a decent chunk of time weighing the pros and cons of, does it make sense to hold on to certain pieces of the federal life insurance and use outside insurance for, like, if you need to replace the multiples of salary, option B coverage, that type of a situation. What do you want to do with your survivor benefit options on your first pension? When does the first supplement turn on? When does it stop? So what are those amounts? And like I said, the timing of benefits, in addition to all the other stuff, is an important thing to take into consideration. So if you're weighing the pros and cons of hiring an advisor or working with an advisor, it would be ideal if you had one that had some background knowledge in the federal benefit system. So we are technically licensed with an industry designation called a Federal Retirement Consultant. So it's an FRC designation. It's professionally listed on FINRA, and in a nutshell, it's a commitment to demonstrate high standards and continuing education and professional ethics and trust, and stay up to date on what's going on with the federal benefits. So every year, FRC makes us take a renewal exam where it's like a multiple choice test, and you got to go through and make sure you're staying up to speed on all the subtle changes that take place in the federal benefit system. Because from one year to the next, there usually tends to be a few things that get changed. There's not a major overhaul, but you want to stay up to date on the most recent adjustments of what's going on in the overall federal benefit system. So, but we usually stay pretty up to speed on those. So I'm not trying to brag, but we tend to breeze through that test pretty easily, because just by virtue of the fact that we spend a lot of our day working with federal employees in terms of putting plans together for retirement. So all righty. So the advantages of partnering with a Fed advisor again. So we have, and this first bullet point is really important too. I mean, I've been doing this for 13 years, and I just have had the luxury of seeing a lot of different unique situations. So that provides a lot of value in terms of working with people going forward, especially when you've seen certain unique situations. Sometimes people's service history is pretty straightforward, black and white, but other times people have a colorful service history, and there's some gray area there. So when and nobody's seen every single situation, but when you've been doing it for as long as we have, you've seen a lot of situations. So that gives you a reference point on how to advise people on what to do with certain pieces of the federal benefits going forward. So it definitely helps to talk to somebody that has a knowledge base and the unique caveats of the federal benefits. So, and again, we're kind of harping on comprehensive planning in on this Zoom call, but it's an important, very important variable, taking into consideration all the pieces of the pie. So pension calculation, surviving spouse benefits, TSP fund options, TSP distribution options. How do I coordinate? I spend all this time saving TSP money. How do I turn it into income? And how do I do it in a way where I don't have to worry about running out of money when I'm 83, but I got enough money that's um, earmarked for monthly income and enough money that's invested and growing and available for emergencies or opportunities that crop up. Understanding the difference between all the different variables of FEGLI. So basic, option A, option B, option C. What to do with those choices when you hit the point of being a retiree. Because Uncle Sam, if you have the full boat of FEGLI, it tends to be fairly economically priced when you're an active employee. FEGLI is a group insurance plan at the end of the day. So I would say when you first hire on, you get a ton of insurance and it costs next to nothing. And then when you start to hit certain milestones of age and years of service, the cards you're working with change. So you want to know what's coming down the pipeline with FEGLI, and you want to make an informed decision because the pricing changes once you hit certain milestones of age and years of service. So it's usually with FEGLI, the big premium increases start between 55 and 60. And the running joke is a lot of times people will hit 60 and not realize that the price of their federal employee group life insurance is going to go up, and all of a sudden their paycheck's like a couple $100 a month lighter than they were getting previously, and they didn't even send you a birthday card. It's just an auto increase based off of your birthday. So then first supplement versus Social Security is always an important piece of the pie to take into consideration. There's oftentimes a lot of debate that takes place on people have a lot of opinions on Social Security, when to turn it on. But if you're in a boat where you're getting the first supplement and you have the ability to turn on Social Security at age 62, it's an important piece of the overall planning process, because for the first supplement just takes into consideration your years of first service with Uncle Sam, whereas Social Security takes into consideration your entire working history. So oftentimes it's not uncommon for people to see a couple $100 a month pay increase if they switch from getting the first supplement and then turn on Social Security at age 62. And a lot of times that gets incorporated into an income plan for what people want to do with TSP. Sometimes they'll set their income amounts for a higher amount for a finite window of time and then dial that withdrawal rate back once Social Security kicks in at age 62, because if they're going to get like a $500 or $600 or $700 a month pay increase just by switching from supplement to Social Security, oftentimes that puts them in a spot where they don't necessarily need to take out quite as much out of TSP funds on a monthly basis. So, but in addition to that, there's several other variables too. Like if you're getting the supplement, Uncle Sam doesn't let you go make an unlimited amount of money. So there's an earnings limitation. And you want to be well versed on how that earnings limit affects you depending on what your retirement plans are. So all righty. So the advantages of partnering with a Fed-focused advisor, again, like I said, experience is an important variable. So the name of the game when it comes to our firm working with clients is to design a plan that will help you avoid short-term mistakes and focus on long-term goals. So income planning is a big piece of the pie. And what am I going to be looking at for monthly income from my first pension? What am I going to be looking at for monthly income from supplement or Social Security? I always say those two pieces are fairly mechanized. TSP is where you have a lot of flexibility in what you'd hypothetically want to do, but you've got to be strategic with TSP, because if you just willy-nilly start taking big chunks out periodically, I mean, you could put yourself in a spot where you might run out of money in TSP earlier than you would ideally want to. So, and we always focus on when we're putting plans together for folks, one of the most important pages that we put together is just the net to net monthly income comparison, where we compare your net monthly income relative to your deductions that are coming out of your paycheck currently versus net monthly income in retirement. And it's easy to forget that while you're actively employed, there's a lot of stuff that you're paying for each biweekly pay period. But once you hit the point of being a retiree, a lot of those deductions go away. So even if your gross income is higher while you're working full time, and the gross number that you're looking at is lower in retirement, oftentimes the net numbers can be pretty darn close, taking into consideration that you're not going to be paying nearly as many deductions as a retiree as you are working full time. So that's a very important piece of the pie. And like I just said a second ago, net monthly income currently versus net monthly income retirement. So, all right. So the advantages of partnering with Fed focused advisor. You always want to take into consideration, like we said throughout the duration of the call, income planning is very, very important, but you also want to grow the money that you have. You need to take into consideration liquidity needs. There's always, we always call it the emergency or opportunity bucket. So when we're putting investment strategies together for folks, in a nutshell, it usually tends to break down to how much do you need for monthly income so that you're not down like a noticeable amount in terms of the net monthly that you're used to living on. But we've also got to set aside this chunk that's invested and growing, but earmarked for the curveballs that crop up in life, which the main ones tend to be house, car, vacation, medical, and there's always a few others on the list, but those are the main ones. So you always want to have a bucket of investment dollars set aside to cover those curveballs that crop up from time to time. So, and an income plan that fits your individual life situation. You want to have enough net monthly income. You want to have enough an emergency or opportunity cash, and you want to put together a plan that can generate lifetime income and put you in a spot where you don't need to worry quite so much about constantly tailoring your withdrawal rate if everything's in one bucket, so you don't run out of money in your mid 80s. And then the last bullet point, for people that are clients of ours, we help them navigate through the retirement paperwork. And like I said, we've had a lot of experience with working with people, like starting the planning process, going through the retirement process, formal retirement process with Uncle Sam. So we've done a number of stacks of retirement paperwork for clients of ours, and we have a pretty good idea of how the most effective ways for them to communicate with OPM once they formally become a retiree. We've got a pretty good handle on how to navigate the waters with TSP depending on what somebody wants to do. So again, those are important pieces of the pie to take into consideration if you're thinking about hiring an advisor with the retirement planning process. So Benchmark is a dedicated resource, so support, guidance, and accountability. Again, the goal is to maximize your income in retirement as much as possible, and not put you. Hopefully, design the plan in a way where you get to a level of net monthly income that you're comfortable with, and you're not taking a hit of a noticeable amount of money on a monthly basis. You always want to stay on track with your retirement goals, but this third bullet point is very important too. Even after the point of formally retiring, people remain clients of ours, and oftentimes the strategy that gets put in place into retirement needs to be adjusted based off of life happening going forward past the point of formally retiring from the government. So we spend a decent chunk of time reviewing what's going on with our clients and in terms of the investment vehicles they're utilizing, and making adjustments to the strategies that we've put in place as life happens. So life always tends to throw you curveballs from time to time, and so those aren't necessarily good or bad. It's just an event that causes you to shift what your plan is. So it's an evolving thing and it's a fluid thing, and sometimes it needs adjustment. And we spend a lot of time working with our clients on doing that and preparing for tax liabilities that you may not have been aware of otherwise. Important thing is that tax laws have a tendency to change. So if you're not staying on top of the changes that take place, you know, you want to realize that and weigh the pros and cons of, is it in my best interest to do it myself, or would it be, you know, worthwhile to hire somebody for some advice? So, all righty. So how to get started? Our process tends to be at least a 3-step process. So our first meeting is what we call a fact-finding meeting, where we send you a list of information to gather, and you don't necessarily have to dig all of the pieces that are on the list to set an appointment. It's just a matter of finding as much identifying info as you can about your service history, because the more accurate the information that we have, the more accurate we can be with the plan that we're presenting to you. So first meeting is usually about an hour and a half, maybe a little bit longer, depending on, you know, how the conversation goes. But it's information gathering and sharing and getting an idea of what your plans are going forward at the point of being a retiree. So second meeting, we take all that data, put it together in a written plan that we call version 1. And it just breaks down choices for each piece of the pie in terms of your federal benefits, breaks down net to net monthly income comparison, and breaks down a strategy of how to generate income from all these TSP funds that you've been saving over the years. So, and then in subsequent meetings, we refine. So oftentimes version 1 turns into version 2 or 3, depending on adjustments that people want to make. So, and then going forward after the point of formal retirement, it's an ongoing relationship. So our clients, like I said, we take our client relationship very seriously. Our clients place a lot of trust and faith in us. So it doesn't just stop at the point of retirement from the government. It's an ongoing relationship from there. And if people need to adjust what they're doing, then we spend as much time as we can walking through the pros and cons of what to do for whatever situation crops up. So thanks for tuning in again. After the call, if you think of anything or you want to bounce some ideas off me, feel free to call, send me an email, or you can always submit a request to talk to us via our website. So again, like I said, thanks for tuning in and hope to see you at some point in the near future.